How's it going, guys? Before I start this video, I want to give a shout out to Delta Exchange for sponsoring this video. So make sure to use my referral link if you want to keep this video coming every single week. Okay, so let's start off there with looking at some of these charts. So first off, I want to start off with the fundamental picture, looking at equities, oil, dollar and gold, right? Because those are the key drivers in the market, and we can argue how cryptocurrency is just a part of the US equities as well. Into 2022, the Federal Reserve was discussing rate hikes, right? So the narrative has been now that we will see rate hikes, okay, which is bearish. And on top of that, we're getting the war, which is really, disturbing the markets and causing a lot of uncertainty for the markets. Okay, so you can already see from 2022 how we had this top formation and all the retest there was basically getting sold. We're getting a lower break-in structure, a retest of that structure, and price is now selling off. So that is the key elements here for the S&P 500. So we're having some support here around 3,000, or we can say 4,000 big figure. Okay, we have here on the volume profile, you can see we're having basically empty space, and then we have some liquidity sitting lower. We have this prior consolidation, okay, and below that, we can argue here we have the bulk of liquidity sitting around 3,500. Because we remain to see how low we're going to go. So I think, if price drops towards 3.5 at some point during the cycle, I think that should be a fairly decent buying opportunity for long term. And even current levels, okay, it can offer a fairly decent level of support. Now you can see how price is running fairly thin. We had one retest, okay, and then price is running thin again. So I think if price continues now without really accumulating, okay, if we get another retest and price sells off, we will see more strength to it. But if not, I think price will start getting fairly exhausted running into the 4,000 big figure. All right, so that is equities, and that is the basis of what will be driving the crypto market as well. So let's take a look at oil. So if you remember all my videos, I have kept on this idea, and I want to short anything between 100 and 110 just because I've been watching this for such a long time at the moment, and we're finally actually getting into that level, extremely extended, and due to the war news, we're seeing a fairly aggressive run oil, okay, and we're seeing the same as a safe haven here for gold, okay, finally actually breaking out from this long accumulation. So this range held a lot of liquidity, okay, so I think we're gonna move in towards, okay, we're running into first level right there, then we're having the next level more into as a sort of a, call it a double top, right, in towards the highs. So I think, as far as the fundamentals are concerned, gold is thriving, right? We're having war and hikes, okay, war and rate hikes, that's the best thing you can do to gold, right? So this is gold's time to shine, at least short term, until we're getting a shift in flows and fundamentals again. All right, so then we're having the dollar, safe haven, or in generally we can argue always that these circumstances is always when when the dollar is thriving, right? When there's uncertainties in the war in the world, putting sanctions on Russia, that is when when dollar also usually does very well. So also by selling, when all these equities are selling off, crypto is selling off, etc. A lot of the sell pressure is basically, right, so you're selling stocks and you're buying dollars, right? So you always see sort of especially during liquidity shocks in the market like this, you always see often a very inverse correlation between the dollar and the S&P 500, okay? So, that is the basis of everything that is going on, okay? And now let's take a look at crypto, which we can argue is just a beta of equities at this point. So let's start off. We can start off with Bitcoin. We're gonna look at a few levels. These were the levels we have been watching lately. This is just a 30-minute chart. I want to go to a bit of a more high time frame, and I want to try to make this video a bit short and sweet, right? So we're gonna go through mostly just Bitcoin. Bitcoin, Ethereum, FTM, Atom, and maybe some other altcoins. But the other altcoins is not really important because, you know, Bitcoin and Ethereum dictates the charts, and they will just suffer into high time frame levels. Okay, so let's go to a weekly, and you can see a few things. And I want to point out, which I think is important. This monthly first. On a monthly basis, you can see how price extended up and we got sold, slammed back down. Now we're closing the full body candle, coming in towards the end of the month now into March. I think there is a big possibility that even next month into March, we might see another sweeper, and then that candle might get bought back up and we might leave another week, and we will see how things are unfolding. But in the grand scheme here, I just want everybody to be aware that we have void, right? And void doesn't need to get close, but it's important to understand that it's there, right? So when you're having the void between 30K and all the way back down towards 10K, that is void, okay? That's weak price action. There is not a lot of accumulation, and the accumulation at the moment now is sitting within the wicks, right? So between 30K and current price levels, and just below, we can argue also just below where you will have the EMA. That is basically, you know, the high time frame levels really to watch, right? So we need to watch the correlation between altcoins and Bitcoin, because if altcoins are running down into massive weekly, monthly demands, while Bitcoin is just hovering around 25, 30K, I think that will be, you know, sort of maybe not generational bottom, but it will be a decent enough bottom to start, you know, bidding really hard. But we have to see how things are unfolding. Okay, so this can play out for some time. So, you know, we just we can't be too eager on it. Okay, too eager on the trigger. So let's go to the weekly chart. So this is the same. We're seeing the same, just with a bit more definition. Okay, so let's see what we have here. So let me take off some of these fib relationships. Not really necessary. This were our short position we had on Bitcoin, where I posted it. We can take these ones out because they are short term. They basically play it out. So, you know, as a bearish case, you know, we can argue here how we're having up formation. Okay, we raided the highs, now selling off, and we're having the 70 and 80% retracement between 15 and 25K. So, you know, this might seem to you as a large level. Okay, you know, it is quite large, right? So let's take how many percent it is. Okay, so give me a second here. So it might be 50% range, which is massive, but in as far as price action, you know, it's just a fractal. So this could be on a 1 minute, it could be on a 10 minute, it could be in a 1 hour, it could be on a 4 hour chart. It doesn't make any difference. Okay, what we understand about price is that we have a weak leg, and if the fundamentals in the world events actually press price in towards those levels, that is levels you want to start really buying aggressively. Okay, really, and I mean absolutely smashing the buy button. Okay, and you know, no stop, just spot. And you know, and or at least that's how I view price. And if that does occur, I think that will be an extremely good buying opportunity. So if I take this chart and I flip it upside down for you, okay, you will see how, you know, we're running into now some, you know, important levels right there. So, you know, we might have sort of a bottom formation forming, but in general we have to understand that we have these levels, okay, and they can be hit. And you know, if you're seeing Bitcoin going back down towards 20 something 10,000, you know, you can see here on S&P 500 that we're having the 4K level, and also we're having this high weekly, monthly 3,500 level as well, right? So if I take this off and you go to the weekly, even monthly charts for equities, right, you can see how this is basically a top formation confirmed, at least in my opinion, right? So we are in a sort of a middle of a bear market, you can call it that, and if you look at price here, we're having around 50% in towards, you know, next large support level, right? So you can even argue that having a lower here for a extreme crisis, though I don't really see that happening. But regardless, we're having then a 20%, another 20% drop, and we are already 15%. That will leave a 35-40% average drop on S&P 500. Will be absolutely extreme, which doesn't happen often, and is usually a really good buying opportunity. But if you're gonna see S&P 500 take another 50% drop, it makes sense for Bitcoin to do another 40-50% drop, which will be basically, the twice as much as S&P 500. So it seems reasonable if you look at that sort of not only correlation, but that we are seeing, the possibility of that happening, and then we can also see if you go into a weekly time frame, how we can, for example, see how potentially, dollar can have a rally towards 100 big figure in towards this prior block, massive block here of liquidity high, right? So we can have a rally for the dollar into that as equities fall, and we're seeing a hedge. Also gold then taking its last run, but regardless, I think we can get a decent run up here, and then you're getting a larger pullback at some point. But taking all these correlations together, I think the same goes here for Ethereum, right? So if then you could get another 30% drop for Ethereum, and then that would leave Ethereum just back around anything between 2,000 and 1,000. Even it's a massive range. It's just the correlation between all the markets just have to be occur together, basically, right? So you can't really say that we have to go to one or another certain level. It's just important to understand the macro environment and tying all the charts together and what we would like to see. So taking everything, even this block of demand off, it makes a lot of sense here. You can argue that we're having a lot of stops, a lot of liquidity resting within these weeks. If you do get an extension, price extends in towards this clean SR, I would absolutely assume price then would make a massive run back up towards the highs, right? And we don't know how long that will take, or how long it will take before it plays out. But liquidity gonna dry up. Always after such a big events, you're gonna have some whip splash, meaning that if you extend, you will have a retest coming back down, and then at some point liquidity will start drying out, and then going some sideways for some time, building liquidity before we're getting a prolonged bear market, or we're going back into towards a bull market, or whatever happens. Just speculating, but important to understand what you want to see in terms of price action, because that is what is basically going to dictate everything that you see. So understanding which levels you're interested in, playing it month by month, and you can be wrong, right? So even if I wait and I say, right, so I think middle of March I want to see this level get hit close to middle of March, right? For example, if that doesn't happen, and and we raid these, or going back into watch this this monthly demand zone or weekly demand zone on close to 2,000, just, or even 1,600 into that block of liquidity, and reacting while altcoins are running in towards their monthly demand zone, and gold goes on a parabolic run, and dollar hits resistance, and S&P 500 makes another run towards 3.5k. Then you're tying everything together, and you start feeling confident about trading basically everything together into one direction, right? Because they will all trade together. There will always be some anomalies. Some anomalies will always happen, that one coin might not drop as much as the other, or some other coins might drop much more than the others, right? Basically here you can see, let's take a quick look at FTM. I've been trading that. Perfect. I had this in the Discord group, guys. Perfect. Look at this entry. Absolutely amazing. But I took some profit around these levels, took some profits at the lows, exit my lost basically at the bottom. Most likely we're gonna trend lower, but you just have to take out, because look at that extension. So this is basically, I don't know what time that was, but I can see it just by the candle that is most likely when the war broke out. Like we see how liquidity the books just get swept completely at that point. So let's go here into towards a weekly chart. So we're seeing this massive take everything away. So I I was looking at these levels, okay, to taking a long. Now we're running in towards this week, so I'm changing my overall bias ideas now, because the chart is looking more like Ethereum, more like Bitcoin with the double top and whatnot. And then we can start arguing here that we're having this clean SR, you can see how this week touch. Let's take a fib tool just from the top to the bottom. You can see how we're having the 70-80%. So since the range might be massive, but we are looking at a weekly chart, right? So you just have to go with the rules, right? So then we're having a larger level here of block of liquidity, basically. That's somewhere in between there. We're going to start looking for a bottoming structure, and even though we having these levels, we still have a lot of void lower. Okay, so we can still go all the way back down towards 0.4. Okay, so we're having that possibility, but we're having here is the clean SR is actually the big figure, $1, which to me is highly interesting. So there will be a lot of things that will have to go into trading this, and also we are in a massive extension, this massive extension as well. So keep in mind that most of the time you will see a week or two of small body candles, right? So if you're going to continue to sell off and you see a small body candle, okay, so let's say you're getting another candle lower. Let me just show you this, because I think this is extremely important in terms of price action. If you get another extension lower, okay, and then you get one small body candle, okay, and then you get sort of another, it doesn't really matter how they look like, it's just that they are small compared to the rest, to the previous candles, okay? So that means that liquidity is drying out. So the longer of candles, the better, right? So even though that might be a continuation of a sweep, but usually that symbolizes that sell price are getting dried up, and there's good times to position yourself, of course, with stop loss and whatnot, to trade price in the opposite direction, okay? So most of the time you will see maybe one or two candles. So you can see here we're having two small body candles after this big sell-off. Close to the top you also have two small body candles before the massive sell-off. Here you're seeing many 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, basically 10 weeks. It was during the summertime. Also liquidity is often fairly thin during the summer, okay, and you see what happens afterwards, right? So you want price to start to get more stability after this massive drop. So you often see that. And if that doesn't happen, if you just see a sell-off and you take a trade and the price extends back up, you always want to take profit at those trades, because usually you're going to get sold back down, right? Because without accumulation, usually price will just reverse in the same aspect, because price will just keep on searching basically for liquidity. All right, so we can go into watch the Atom chart as well and take a look. It will be the same, right? So all of the altcoin charts, everything will look the same, just with different levels. Let's take away this volume. So on a weekly basis, let's take the 3-day chart. I think, yeah, much better. So see what levels we got on. Yeah, so perfect. So I'm still waiting for this scenario to play out. Posted this on Twitter. So yeah, I think this is reasonable. This is key setup in my opinion. Now, if you're gonna get it or not doesn't really matter, but I think it's absolutely perfect. Getting price back down in towards these levels right there. Okay, so here's the block of liquidity. The further we go in towards that level, the better it will be to trade it. We're having a lot of support below there, so just keeping high time frame bids within and anything actually between 16. We might not even get that low, who knows, but anything between 16 and 8 will be, I think, extremely good buy opportunities. Let's check. So 40%. So if Bitcoin and whatnot, as we talked about, if you get some kind of a massive liquidity shock and price extends, you can see on the volume profile that back towards the $5 mark. Okay, so I wouldn't be scared buying spot into those levels, right? This is where you do want to buy spot, because at this point, since we already made this lower highs, right? So we can even go back up actually, okay, and then continue to make a thrust lower. regardless. Okay, but if you do get that level, I think, it would be stupid to not take any positions. So quick look at Luna as well. Let's take a look here. So Luna extremely strong, sitting at these levels, but keep in mind that if this level turns into a distribution, it will hold a lot of liquidity. Okay, and you will see the same as we saw, that price just sweeps straight through it. All right, so in the grand scheme here, the 30 mark, I think $20 to $30, is the key level that you would love to take, a fat position on Luna. Let's see if we have anything else that we can take a look at. I don't think it's even any point. Near, I'm still holding actually a bag of Near, but this is the same. Okay, I think we're having some decent levels. Okay, so it's the same concept. The further and lower we get, okay, the better it will be, higher the probability of your trade. So I think as we're coming back down in towards the 5 mark, I think we're going to start seeing a lot of accumulation happening, a lot of demand coming in between 6 and 4. Will be interesting level to see how it resolves, especially if we extend now a bit weaker into this. This should probably be the 70 and 80% retracement as well. Okay, so yeah, it's close to the 80. That would be actually a really good buying opportunity, and current level as well, right? So this is also a potential support. Okay, so I think actually both of these 70-80%, you can see even to the left of the chart, you can see how we're having the highs capping price, the lows there, you're having the low end of the consolidation. You're having this support after we broke out, had the support of the retest. Okay, so we're coming back down, so it's absolutely important levels. Only difference is the strength basically of this last sell-off. We had this tiny accumulation before shooting lower. So yeah, I think we can get into what some of these deeper levels absolutely possible. So especially if if you think Bitcoin will go lower towards the lower spectrum of the 30s, Near won't just go 5% lower, right? It's reasonable to think that we might get another 40% on Near as well. But it doesn't need to happen. We're just looking at levels that we are interested in taking trades on. All right. So let's take a look here if it's anything Bitcoin, Ethereum, AVAX. Can take a quick look at AVAX. Is probably decent. So sometimes since I took a look at it because it wasn't clear enough for me to take a trade. Okay, so we just made a retest back up into towards the supply zone right there. Okay, we sold off. Key support level. I don't really see anything. All I know is if you're getting a sell-off back down towards 40, would be extreme good level to enter long term. That would be also a 40%. So I think a lot of charts actually lining up with the 40% mark, and that is something you should pay attention to. FTM, Cosmos, Axel, nothing. Okay, so let's take Cardano is the last one. I just wanted to mention this, right? So we had this demand zone with these wicks, okay, but it failed, and you can see how you're basically having lower high, lower high, okay, and then you're getting an extension, and we're closing in. Look at this, right? So we're closing in a lot of this void. Look at that void, right? A lot of the void are we closing in. So, we have to use these ideas to correspond with the rest of the chart, right? So if, for example, Cardano coming back towards 0.4, 0.2, while let's take a look, it's probably 40% down there, isn't it? Let's check. Yeah, so to 0.4 is around 50%, and that would be a clean retest of that previous high. Let's take a look here. So I think that's a fairly reasonable level, and that will correspond with the rest of the charts, and then we will see how everything is unfolding. Okay, so I think that gives a very good picture of what to expect. So we just have to, watch how things are unfolding, because even though it seems a bit too much on the crypto charts, you have to acknowledge where the equities are sitting, and you can clearly see that this is a massive bearish sell-off. Okay, and we only had 1-2 candles. I'm expecting one more, okay, one more monthly candle, and then we're gonna see how things are unfolding. And we didn't have that during the Corona dump, more or less. Okay, so we had then 2 months, 1.5 months of sell-offs, and then we had the quantitative easing. We had the zero rates, okay, which really boosted the market, and you can see what happened afterwards. So we just have to pay attention now as we're getting a reversed engineering of what happened during the pandemic, right? So in reality, what is going on in the markets now, you're having an inverse reaction of what happened. Okay, so what made or created this massive bull run, the central banks are taking it away. Okay, so you're getting an opposite reaction or opposite policy of what caused this whole bull market. Okay, so that means that they're basically creating sort of a bear market, if you want to call it that, necessary due, or they're getting forced to do it due to inflation, okay, and all the debt that has been created during these years. Okay, so I think now it's getting a fairly decent picture of the overall market conditions. Okay, and this is a high time frame perspective, and there will always be trades in both direction on lower time frame. We have to see week by week, day by day, especially concerning what is going on in the world, right? So every single month and every single week you will get new data points to form an idea of what is going on, right? So in March, beginning of March, we're going to have the NFP, we're going to have the CPI, the inflation, that will give you a new picture of what is to be expected, right? So if the CPIs continue to be extremely high, if the job numbers are fairly decent, we have to expect the Fed to be more hawkish, while if you're getting the opposite from the CPI print, which is not likely, you will then see the opposite again, and the Federal Reserve to be more dovish and maybe not as extreme with the rate hikes and whatnot. We're having the war. There's a lot of things going on, so we're just taking week by week, month by month, and see how low or how cheap we can get it. Because keep in mind that the bear market has already happened. So at this point, you should want these altcoins to go as low as they can, right? You want to buy you want to buy AVAX at $40. Why do you want to start moving much higher at this point, right? Much better if you get a fairly aggressive and decent discount. I think that would be much better. Okay, and especially considering the structure, right? You're getting here lower highs, okay, price retest, lower highs. We are engulfing all the gains back down here, right? The extreme pressure on the sell side. No point to be in the middle of a war, and on top of that, we're getting rate hikes next week. So we have to keep bias in check and see where everything is going. Okay, guys, peace out.